back to my YouTube channel. Welcome back, one. Welcome back. Today we are receiving more news coming out from the market. A lot of mixed results are being released. As of now, though, we are seeing growing uncertainty within the stock market. FUD is growing, even though we have seen the stock market have been exiting a technical bear market. But however, China does surprise the global economics by slashing their rate. They have seen a tremendous economic slowdown within their country, which actually sent oil price down significantly. So oil price did fell below 4.6%. That was really terrible here. And why is this such an important concern? So China is the world's second largest economy, which is the United States is first in place. Following after that is China. China manufacture billion and billion worth of good to foreign nations, especially the West. So China really play a crucial role in the global economic infrastructure, and that why the market is traveling due to China recent concern. So people are fearing of a global economic slowdown, which could happen as of now though, and this is what we have seen. And why this happened in China is just the result of their zero COVID policy, which they bear no mercy toward anyone. If you are infected or your test results showed up to be positive of COVID, you will be locked down and follow all those measures and protocol. Also, the real estate sector actually down. A lot of scandal happened within the last 2 years, so we are not really surprised with the housing market. But also, just recently, more crises are coming in with China, where their banking system was kind of collapsed and just freeze million and million of banker. So that's what we are seeing. But as of now, though, uncertainty are fueling up, and right now, China is actually signaling and reigniting the possibility of a global downturn. So, however, we did see some good results coming out from the market today, which U.S. manufacturing product actually accelerate in July. That is pretty good, with more product being manufacturer that's good for economy. The economy is moving. The economy is moving, which means more faith in the consumer demand is still up. But however, there is still more great metric out there that we must take into consideration. Yesterday, we have talked about our New York manufacturing data, which actually worse than expected. That is just the case here. But however, overall stuff within the United States, manufacturing production accelerate in July. This is growth here. This is what we are seeing. So a lot of stuff happened. Manufacturing output rebounded 0.7% last month after declining 0.4% in June. Federal Reserve said on Tuesday economic poll by Reuters had forecast production would rise 0.2. So we actually did beat our expectation. That was really impressive here. And manufacturing actually account 11.9% of the U.S. economy. So we are still seeing strong demand for good, even though inflation is up. And right now, the Fed is going to tame inflation at all costs. And we in their next FOMO meeting is in September. This is just great position here. However, the market still bear with many uncertainty. So a lot of stuff are going on around, and this is just some good news that we are seeing as long as the economy is recovering, confident being rebuilt, and the market is pretty good though. However, wages did fall at sharpest rate on record. So regular pay fell at the sharpest rate on record between April and June. So inflation has peaked, and as a result, wave has slowed down. So we have seen wages when taken into account rise in price drop by 3% on the year, the Office for National Statistics. However, we are now seeing higher costs, with household budget hit the hardest by soaring energy price, higher fuel costs. Fuel costs have been gone in a decline with this past couple of days, but however, things are still not looking good, folks. Let's look with the UK inflation rate all the way up to 9.4. I thought the US was worse, but UK is way worse than us. But even though we have seen soaring energy bill, it's especially hit the most, and also higher food up, which is very shocking though. So inflation actually eat and limit our spending power, even though we are now spending with the same amount, but our buying power is actually decreasing at an extraordinary rate. Not to mention the housing market is cooling down. We are now seeing the housing markets tumble in July to a 17-month low. Why is this the case? Interest rates are up and so is mortgage rate. That's why less people are applying for mortgage loan, and that's actually cooling down the housing market. But however, the U.S. home construction plunged in July for the third consecutive month. This is actually terrible, folks. If there's less supply within the housing market, do you expect the price of the house to go up or go down? With less supply, you're going to expect the price of these homes to go up. Even though interest rate is up, it should tame inflation. However, this is not the case with construction. If you have more home in the market, you can expect the price to decline. But however, with limited supply within the housing market, the price of the house will go up. Even though the Fed is raising interest rate, that would not deter anyone. This is just one of the facts. So really not good for the housing market, but right now we are seeing some cooling off. However, with less supply in the housing market, one obvious stuff is that the demand for housing is declining. But however, the price of housing will retain their support level and might even increase if there's less demand in the house, less supply in the housing market. So housing start dropped 9.6% last month, and this is what we are seeing. A lot of stuff wants to be very concerned because many more magnitude and effect are taken into consideration with the economy, and this is what we are seeing. Just look more. Economics are fearing the possibility of the U.S. entering a recession, something very concerning here. Dangerous territory. Investor Peter Boockvar. One recession is spread to other part of the economy. We are seeing the economic slowdown. Our next most present data is our GDP for the third quarter. If the GDP data came out and it's contract again, that is terrible. That's terrible, folks. And many economics are warning the possibility of the U.S. entering recession. Not only that, let's look more. Peter Schiff warned U.S. face a massive financial crisis. Economics expect much larger problem than 2008. We are now putting more money in the economy, stimulating to the point that inflation has gone up exponentially. So there's still a possibility and rumor of the U.S. entering a recession, but however, we do see real data showing that the economy is slowing down. We are seeing contraction within the U.S. economy. That is a fact. So that is what we are seeing. But however, inflation is taming. But the real question is, will inflation contract within next month data release? That is very important. So if the trend of contraction continues to follow, the economy recovery will continue to pursue, and that's very great for economics and investor here. Last up, folks, if you was not surprised about this, Apple decided to lay off their recruiter as part of a slowdown. So they did lay off 100 recruiter contract. We let go last week. Very shocking news coming out from the market. And this is not very... So I did expect it, some slowdown, and they did announce that they will freeze their hiring. So this is just the beginning of an economic slowdown, folks. So, and then no. If you enjoy watching my video, please click on that subscribe button, and also don't forget to click on that like button, folks. Thank you, everyone. Have a nice day.